Hello and welcome to Questioning the Manager. Today we are joined by Tim Stevenson, who's the fund manager for Henderson EuroTrust. Tim, thank you for joining us today. Most of 2018 is behind us with only the final 3 months of the year to go. So how's the period played out for Europe's mid and large cap sectors, and how has the trust performed during the period?
Europe has struggled a bit this year, really, just in many respects. The economies have tended to sort of plateau, to sort of slow down a little bit. The bigger concern has been the political uncertainties. We're a year on now from the German elections. It's taken a long time until the coalition was formed. There's some tension within that coalition pretty well as people sort of begin to position themselves for a post-Merkel era at some stage in the next 3 to 4 years. The Italian election obviously caused some stress, with ultimately an alliance, the sort of extreme left with the extreme right, which is perhaps sort of inherently unstable, and a lot of tension related to that. So a lot of the noise has been taken by politics, while economies have tended to do okay. No, they're not rip-roaring away, but they're doing okay in Europe, so it hasn't been that exciting. So it's been a tricky period for the markets overall, probably flatlining, roughly speaking. Not much change in the currency. Sterling has stayed at a pretty low level against the euro. Within the fund, we've actually done quite well, though. In our financial year to the end of July, the fund has outperformed by a little bit over 1%, which is encouraging. And that's been down to some really good stock selection and some terrific performance from 1 or 2 of our holdings.
And how much can you tell us about your activity on the trust portfolio during the year so far?
I think the biggest obvious change is the fact that we've actually continued to reduce the number of holdings down to sort of around about 45 now, have been around about 50 for a few years. So a slightly more concentrated portfolio, and what we're doing is really beefing up the conviction in a position that we actually like. So for example, Deutsche Post, which is one of our shares that's not done terribly well for us over the last 12 to 18 months, rather than panic about that poor performance, we've actually built the position size to be a little bit over 4% of the portfolio. The same with something like Amundi, which has also sort of broadly speaking gone sideways. We've continued to build the size of that position. So the overall weight of our top 10 in the portfolio is larger than it was about 12 months ago, so quite significantly larger. So it's a higher conviction portfolio, and given the fact that many of these companies have been doing quite well, that should be good news as their share prices ultimately perhaps begin to reflect that better outlook for those companies.
Now, for UK investors, there is a lot of uncertainty and some reasonable concerns about the UK's economic prospects in a post-Brexit world. Now, the Trust invests across Europe, including non-EU countries like Norway and Switzerland. So my question is, what is the attitude like on the continent towards Brexit and the Euro's economic outlook?
Yeah, I think it's a very important thing to remember with Henderson EuroTrust that we have not invested in UK holdings since 1995. So we have constantly what we've tried to do in the fund is to create something that is not necessarily readily accessible for UK investors. We're trying to access those leading European companies, which are otherwise more difficult to know what they are, who they are, what they're doing, and what their prospects are. So we've not actually invested in the UK. That doesn't make us completely immune to what's happening in Brexit, because Brexit will have a negative effect on Europe as well as obviously on the UK. But in Europe, it's basically life is continuing as per normal. Brexit is a sideshow that is going on in the UK, which you may, as I do, take the view that is turning out to be an absolute mess, because it's not actually offering a single solution for the UK to any of the problems we face. If anything, it increases the problems. What we're seeing is that companies are quietly moving on with trying to work out what they need to do to keep access to the UK market and not to find their business in some way challenged, threatened or disadvantaged by their UK businesses. So we're seeing a sort of quiet move to sort of set up warehouses in Europe, if that may be where the distribution's got to happen and so on. So it's wrong to say that people are ignoring it. Most people are just looking at it slightly baffled and sort of saying, kind of, what's the point? What exactly are you trying to achieve? And trying to keep Europe running on and sort of with the underlying facts of the access to the big market, the big population, the free trade, none of these other restrictions, and no company wants restrictions to the way it's moving its stuff around. So it will be disruptive, but way more disruptive to UK than it will be to actually Europe, but it's not good for anybody really.
Tim Stevenson, thank you very much for joining us today.
Thank you.